Traders, how we doing out there? Welcome back to Stock Market Movers. Let's talk about this market. It is looking like we're getting a little bit of a bounce here. Let's see if it's going to be a short-lived bounce to the VWAP, or will we flush right back down? We have some headlines to talk about. Of course, we'll get into Tesla. Tesla's been in the news the last couple of weeks, and we'll see if we get a bounce back from Tesla. Did do a little bit of a bull trap at the gates, came back towards support. See if it's able to actually hold on today and close in the green today. And of course, Southwest issues still out there. We'll talk about Fed hike rates and their effects. And of course, we got our guest today, Adam Johnson, author and founder at Bullseye Brief. We'll talk all about his updated outlook into 2023 right here on Stock Market Movers. There are three ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, how we doing out there? Definitely hit the like up. Let's get it started. Let's get some people in here. You guys can do me that favor by just clicking, that little thumbs up down below. Let's get towards the action. Let's talk about what's going on right now in the SPY. Let's go to a 15-minute as we're seeing this little ramp back up towards the 380s. Now, VWAP, we just talked about it. Will it reject there? Will it get back into the 30, 80, 50s? That's where I would say it's actually holding above there. Now we'll look to see what happens here. Do we just get a knock right back down? I'm going to go to a 5-minute here to see a little bit closer of the action. We'll actually get towards a 3. I'll put it full screen here. As you guys can see, out the gate, SPY making a little move. Looks like it had a small little kind of flagging pattern here, and then just could not hold, right? Some could call this a decline in wedge if you wanted to kind of do this as the horizontal line, but it didn't hold. It didn't break out, right? It broke right back down. Now we'll look to see if we get a little bit of recovery, or will it just reject here from kind of the 380s level. All right, another couple of stocks that we've been focusing on, of course, has been Tesla, right? Tesla has been a major focus. Today, we did do a nice little push up, came back all the way back down, trying to crack, going back there through the support in the pre-market action, at least from 6 a.m., going back closer towards the action from yesterday overnight. And this early morning at like 5 a.m., we were down there even to a low of 104.22. Well, it looks like we got down there towards a low today of 108.33 and started getting a little bit of a bounce. Of course, Tesla is in oversold conditions. And just to kind of state it, one thing that we were talking about is that on the RSI, you went down there to 8. The only other times I've seen it down there is closer towards 11. Today, we're already bouncing back a little bit on the RSI. We'll see how it closes the day. Of course, oversold conditions never tell us that it's means that it has to bounce back, right? Doesn't mean that nothing really has to bounce back, but we'll see what happens with Tesla. Can it close back above this kind of 115 area where you have a couple of wicks on the 15 minutes? That's going to be an interesting outlook there. Of course, everyone talking negatively about Tesla. Eventually, there's going to be some seller exhaustion here, and we'll get a little bit of a bounce. The only question is, after that bounce, will it get another knockdown, right? All right, getting out of Tesla talk. Of course, there was some kind of analysts being put out today. Analysts pretty much bringing down their price target. It was Bird, and they reduced their price target from Tesla to 252 from 316. And of course, you guys can see where we're at, 113, pretty far away from 252 there. Of course, we'll take a look at the Fed hikes and what has been going on there. Of course, one of the things that we've been seeing and talking about here is how we've been having kind of this expanding range every time we get these takedowns. And let's go to the ATR here that we've been looking at. Now, do we get another expansion here on the ATR? Of course, the ATR is this kind of yellow line that you see on the bottom here. I run it through volume, but that's just so I can overlap it and not have it in two different places. So, I mean, we could even just call kind of like a trend line from here, right? You could see here, Every time that we've gotten kind of towards the top, it's usually towards the bottom end of the ATR when the volatility is slowing down. And when we're near the bottom, it's usually when volatility is at its highest, right? Well, let's see if we get another ramp up towards this level and then we get that next expansion down towards the 350s, or will we just kind of hold here and get out of this range? It seems like we're starting to make a little bit of a sideways range. I want to see if we can get back to 385 because it seems like lately we can't even get into the 384s, even though you have some wicks there in the 384s. Of course, big breakdown if we come through 375. We'll see if we actually cut through there and start coming down towards the lows. Of course, we got to watch to see what's happened into 23, right? Will we have a January effect? Will that come into play and turn this around? Of course, one of the things that I'm just going to be watching is ATR, but not trying to call the bottom anytime soon because there's still headwinds at play, right? We don't know exactly how the beginning of the year is going to go. The biggest thing for me is going to be looking at the EPS, the earnings growth, right? What's going to happen there? Are they going to start meeting where everyone expects it to go? Or will the earnings just not be as bad as expected and thus giving us a little bit more of a lift into the beginning of January? Seems like the last 2 quarters, everyone has been expecting really atrocious earnings. And of course, the earnings estimates are what everyone's kind of focusing on. The S&P 500 earnings, will they rise 4.4% in 2023? Or will it be kind of more of a zero growth, right? And will that be recession, right? Will we get negative? Will we get a contraction of these earnings growth? Something definitely to keep in mind. We'll see what happens there. All right. Of course, there are some other news out there. Lyft. Of course, this hasn't been a really good time for Lyft right now, as it's starting to cut through even its IPO public shares. It's now down to $10. And Lyft is just pretty much getting hit hard as low as possible. We'll see if these stocks can come back later on, but I wouldn't want to be in Lyft or Uber. I've talked about this for a while now. Just doesn't seem like this is a story that I want to be a part of right now. We'll see if this growth can come back, but doesn't look good for Uber or Lyft. All right, let's keep moving. We'll go to AMC. AMC announcements that Adam Aron asked the movie theater chain board to freeze his salary, as he also urged other top AMC executives to do the same. One thing that I would say is that, I mean, AMC really started this party from around $3, right? That's when we were back here. I remember it. It was in early January of that kind of 21. It was when I saw this volume massively increase. There was a day right here, 254 million shares were traded that day. The high was 320. I still remember it. There was something odd about that. I was like, why is there that many shares being traded in AMC? Well, very shortly after that, that's when we started getting those expansions. And now we're right back towards those $3. So what does that show us? A lot. Well, a lot of the times, one thing that I've learned in this kind of bubble action, and it's just for maybe AMC traders to kind of think about, right, is that when we do have these bubble types of action and we get in these massive returns, it's okay to take some reward. Let's say if you were expecting AMC to go towards, let's say, $100 when it was going up there to 70, I might have not been in your camp. That doesn't matter. Either way, there's always an ability to pay ourselves when we're getting into the rewards. I think a lot of people in AMC held throughout that time, and it could have been they were with the movement or whichever way you want to think it. But if you get a stock to go and make, let's say, 1,000 or 1,000 plus return, and you're holding it all the way back, 90 something percent on the way back, well, that just goes to show us that at some point, especially when we're getting these bubble action, we got to take some money and run. And this market has definitely been kind of more that take your money and run market. I mean, we can think about it even in a stock like Apple, right? Apple has made a big drive since, let's say, like 2019. We could do it at 2020 in the pandemic, whichever way you want to think about it, right? But it's made a good drive, right? It's made about a 200% move for one of the leading stocks in the S&P 500. Now we're starting to turn around here. Now I think that's when you're starting to really start to question, because there was one thing when we started breaking down here on like kind of a daily trend. But now we're really starting to break down even weekly trends. I still remember when Microsoft broke the 250 mark, and then we came back to the 260, now coming right back down. That's where, when you're having higher quality names, I kind of understand that you're holding on, because with these stocks, they have the cash flow, right? They have the actual ability to survive in tough times. Now, when we go and we look at a stock like an AMC, we need to always look back and ask ourselves, does this valuation make sense? If it doesn't make sense and we're getting over appreciation, at some point, we might have to run towards profits. Like always, you guys make your own investment decisions there, but I think it's an important lesson to learn, because I myself went through it with certain stocks, right? And understanding that, let's say, like in the SPAC game for a long time, I was getting these pops, right? We're getting big pops. And a lot of that was running towards some of the profit really quickly. If I got a 30, 40% return on a stock in just weeks, well, that's a massive return. Got to take the profits and run sometimes. I feel like that's truly what I've learned in 2022 and going through kind of, I'll call it the 2020 bubble, because it was kind of a pandemic bubble. Can you believe that? But it's crazy. We had it, right? And I think a lot of that was a lot of traders made massive gains. Some watched all these gains come all the way back. So at some point, we got to figure out where we're taking profits. If not, we just get left watching the deterioration. And of course, don't fight the Fed. Very simple message that I would say that I always heard it. Now I definitely know it, right? I think that we all can learn from moments like this. And that's what I would suggest that is some of my learning lessons for 2023. All right, so in a second, we're going to get into our interview. Like always, that's what we've been doing. We've been looking into 23. Of course, 22 is pretty much out the window now. Some people are saying that we're getting, some lost tax harvesting. Some people are saying, well, we're just kind of selling off because there's not the positive rally kind of mentality out there right now. I feel like at the end of the day, we've had our nice little push in the fourth quarter, and now we're just getting the pullback. The headwinds are coming back into play. The only question is, can we actually get some of these headwinds under control? And are we going to really start seeing some questions in the Fed's initiative, in their plan? Will they start turning? Will they start telling us that they're starting to see weakness in the economy? That's some of the things that I've been talking about, right? And of course, like I always talk about, Jerome Powell, what will he say? Will he still continue on the jobs robust, and that the jobs market is not showing any weakness, and that the soft landing is still available? I think one of the things that we're all kind of coming to an understanding of is, if the jobs number is not going to jump and we're not going to get a recession, then the soft landing can happen. This is where it gets a little bit crazy out there in the mentality, where you're seeing a lot of two sides right now in the market. You're seeing some people say, well, jobs are not weakening. And then you're seeing some people saying that it's just around the table. Let's ask Adam Johnson what he thinks on some of this conversation and some questions that you might have going into 23. Drop it in the chat, team. It's good to have you guys here. Let's get into it. I got EKS, Hammer, Chris. What's going on out there? Shannon, Jay. It's good to see you guys in the chat. Let's get into our interview today. All right, let's get towards our interview. Let's bring on Adam Johnson. How are we doing today? Welcome back.
Hey, great to be with you, Mitch. Merry Christmas, Happy New Year, all that good stuff. We're back.
Yeah, definitely. It's good to be back, just getting ready for the new year. And I think one of the most important thing is kind of looking back and learning what we can really take a step forward, right? Because if we're not taking a step forward in our career, our skills, or maybe our portfolio, well, then I don't think we're really meeting our goals, right? And we all are shooting towards meeting those goals. So let's get into it first. I know that we've already done an interview looking into 23. That was a little bit back in October in the fall time. So let's talk a little bit about what has changed, really. Of course, we have been seeing inflation truly start coming down. And Jerome Powell start finally slowing down the pace of the interest rates. What does that mean for 23?
I'm amazed actually, Mitch, and I'm glad you're starting with Jerome Powell. I'm amazed
Yeah.
that people still think that he's the most hawkish central banker in the world. He's not.
Yeah.
He's already told us that he's effectively, in fact, the whole Fed, based upon that dot plot, the whole Fed structure, all the governors have basically told us that they're pretty close to done. They're going to raise rates another maybe 75 basis points, and then they're going to pause because, as Mr. Powell told us, it takes time for rate hikes to percolate through the economy, right? And he wants to see, how we doing? So it's amazing to me that we're all still saying, yeah, gosh, he keeps hiking. No, he's almost done. That's the pivot. Um, he's not going to lower rates anytime soon, but I think he is going to stop raising rates in the first quarter. And at least if rates aren't going up anymore, Mitch, what we can do as analysts is now say, all right, here's where interest rates are going to be for the foreseeable future. Let's rerun our dividend discount models. Let's rerun our cash flow analysis because we know where rates have stopped, right? So that gives us some certainty. We might wish that rates were lower, but at least we know where they are. And I think that certainty will enable people to have some confidence and go out and start buying stocks again.
Let's talk about that, Adam, because I feel like it makes extreme sense, especially when you're talking at the institutional and the hedge fund level, right?
Yeah,
Because at the end of the day, to put the inputs into their models, they either had to estimate where the end was going to be, but now we kind of know where the end
yeah,
could be, right? And that's the important thing. I think that, early in 2022, you just had to guesstimate
right.
the ending outlook. Now, like you said, there is the ending outlook. So those models will come back more into play. And that could probably be bringing some more money back into the table, back on
I
the
think so.
on the
I think
sidelines,
so.
right? I mean,
Yeah.
that's just normal right there. And using some statistics to finally come into play. Cash flow has been a extreme focus in 2022. I expect it to be an extreme focus into 2023 as
Yep.
valuations start to matter again, right? For a little while there, I don't know what we ran into, but it was something else, something fierce.
Oh yeah, it sure was. You mentioned cash flow, and that's really the whole story. When interest rates are low, you can get away with a lot. As Warren
Yeah.
Buffett likes to say, it's not until the tide goes out that you find out who's swimming without a swimsuit. And
Oh,
once interest rates start to go up, companies that were probably borrowing money they shouldn't have been borrowing, all of a sudden, their backs are against the wall, and that's where the short sellers zero in and say, this is unacceptable. It's a weak company. They don't have the cash flow to support the debt payments. Or, hey, wake up. This valuation's too high. It shouldn't be trading at 20 times sales, et cetera. So there's been this huge flushing out that has turned into a flush of everything. And I think we're actually starting to get towards the end of that. Just here, got my notebook right here.
let's
Just
do it.
before you and I jumped on, I ran a screen, super
Hmm.
simple screen for my Bullseye subscribers. And I said, show me all the stocks in the S&P 1500. So large cap, mid cap, small cap. Show me all the S&P 1500 stocks where there are at least 5 analysts, where the Bloomberg analyst rating is at least 4.5 out of 5, which means basically it's almost all buys and there are no
Hmm.
sells. And then show me finally where the average price target for these analysts is at least 50% above the current stock price. All right. In other words, I'm looking for quality names that are trading at a big discount to the target.
Yeah.
Here's some of the names that showed up, which just gets to this notion that everything's been flushed. Amazon. Okay, I know people think, yeah, Amazon should be down, but Amazon made the list. Delta, Salesforce.com, Signature Bank of New York, extremely well capitalized. EQT, one of the best operators in the shale patch. Coherent Lasers, COHR. I mean, these are very high quality companies. And as you point out, all with very strong cash flow that have been flushed. We are at a moment where everything is getting flushed. Now, there are a bunch of names on here that I'm sure our viewers and listeners have probably never heard of, and that's fine. But I wanted to at least share with you some of the obvious ones because it really gets to this notion that when people are in sell mode, and
Hmm.
we have been in sell mode for quite a while now, they just sell everything. They just go to cash. They get totally disheartened, and
Yeah.
I don't think that's a smart way to invest money over the long haul. You might save yourself from grief for a couple of months or a couple of weeks, but this is where we buy, Mitch. Down here, it's uncomfortable, it's hard to do, but this is where we buy.
Yeah, it's really difficult. And I feel like, you've talked about it in our video last time that some of the big boys and the hedge funds, right, that might have some positions in like an Amazon
Yeah,
or let's say a Microsoft or Google that's down big, right? Like we all know they have exposure to these big names, right?
sure.
So, what are their mentality as they go into 2023, right? What is that mentality? Will they be moving even more money into those best of breed stocks, and it's going to be more of that stock picking environment?
I think so. Well, just take the guys who are a couple blocks from me here in New York City in Midtown over at Tiger Global, right? Julian Robertson's firm. Um, and there are a number of managers over there considered for a long time the smartest guys in the room. They're growth managers. Like me, I'm a growth manager. I'm not really a value guy. American ingenuity, the people and companies driving the world forward, right? But a lot of these managers over at Tiger Global are down 50%, along with Kathy Wood over at the ARC ETF or Bailey Gifford out of Scotland, but they buy a lot of US companies. Growth managers are down big time double digits. And so if you're one of those guys, if you're a Chase Coleman, to name one of the better known Tiger Cubs, not that he's a Cub, they were running what, 18 or 19 billion dollars. Now they're running 8 or 9 because it got cut in half. If you're going to try to make that money back, you can't go to little biotech companies that no one's ever heard of. It might be a 10 bagger, you might buy a $2 stock and it ultimately goes to 20, but because they're so small and illiquid and you run $8 billion, you can't get your position on. So you go where you can get a position. And I think that's these large cap tech names. Take your pick. I shared a few with you, but they're all down. From Salesforce to Palo Alto to Facebook to Google, Apple today, the lowest since 2021, on and on. If you're a Chase Coleman over at Tiger Global, you've got 8 billion and you need to try to make back 8 billion. You're going to go buy a big chunky stock with cash flow, but a big chunky stock where you can get your position on that everybody knows that when this market turns, we'll find a bid. And so I think that's a reasonable place to start your search if you're looking for names to buy.
And of course, let's talk a little bit about 23 and where do you expect to see maybe more pain, or where do you think that you could see maybe a trend rapidly reverse?
Well, look, oil has done incredibly well.
Yeah.
And, what if? Let's just play what if, crystal ball
Hmm.
stuff, right?
Yeah.
What if for 2023, there's some sort of, to use a fancy word, rapprochement. We'll use the regular word, peace, between Ukraine and Russia. What if
Yeah.
hostilities, I don't want to say cease, but they find some sort of common ground and they start to negotiate. The first thing that's going to happen is oil is going to drop 20 or 25 bucks. Well, guess what's going to happen to all these oil names that have led the rally, from Chevron and Exxon to an EQT or to an EOG, et cetera. All these companies that were left for dead 2 years ago when oil went down to negative $35 have come roaring back. They're going to get hit hard. So I actually think oil is a place where there could be some risk.
Yeah.
Also, you're starting to see supply come on now from both Iran and Venezuela, and that's starting to make up for the lost production from Russia. But again, if you've got some sort of rapprochement between Ukraine and Russia, then that Russian crude comes on, plus the Iranian and Venezuelan crude. So I think there's actually some risk in oil. I really do. I don't own any oils right now, and I'm a former oil trader. I love oil. I could talk about it all day, but I don't own any oils right now, Mitch.
Yeah, it's tough because you're near the top end and you've been running for a very long time. Let's just be
Yeah,
honest. And you're right. If for some reason we were to get a massive supply back onto the markets, what would that do? And if we're
well,
already talking about recession, what would that do, right?
right.
Well, I mean, if those are the things that we're looking at into oil, it's starting to seem like we're having more headwinds in oil than tailwinds. So
Agreed.
just something to think about. All right,
Yep.
let's keep going. Let's take a look at what are your thoughts on global recession, right? I know that
No.
we're
In a
not
word,
here
no.
to. I like that. Well, why no? Why no?
And by the way, I'm not going to speak to global, but I will speak to the U.S. I'm an American
Okay,
ingenuity guy,
of
and
course.
the U.S. is the largest economy. So if the U.S. avoids recession, that bodes well for the rest of the world.
Yeah.
But I'll tell you why, Mitch. We have the most number of people ever making the most amount for employed. Okay, the most number of people ever are employed. Fine. As a result, they are making the most amount of money ever collectively.
Hmm.
They are out there spending the most amount of money ever, and that has been generating what has been the highest earnings for the S&P 500 ever. Now, I will admit that earnings may face some headwinds over the next quarter or two. But my point is, when you've got record numbers of people working, generating income, spending money, it's awfully hard to see how that becomes a recession over the next couple of quarters. I just don't see it, Mitch. I
Hmm.
think that we have worked ourselves up into a froth
Hmm.
about recession. And one of the reasons I think we have done that is that COVID really damaged our collective psyche. We kept getting hit with one variant after another. And so we kept kind of looking over our shoulders. Wait, what's coming next? Well, I think we're applying that same mentality to the market. Inflation, oh my gosh, that's bad. What's coming next? Well, could be recession. What's coming next? Maybe earnings are too high. You see what I mean?
Hmm.
It's as though we're in this negative cycle where we're looking for reasons to sell. If GDP is too strong, we say, see, the Fed's going to have to really clamp down on rates.
Yeah.
If GDP is too weak, we say, huh, you see, the Fed's already caused recession. We're looking for reasons to sell. It's a negative mindset. We need to get out of that, and we will. But I think that the economy is fundamentally too strong to go into recession the next couple of months. I think we already had it in the first two quarters of this year when GDP actually contracted. It's expanding now, Mitch.
Yeah, and I think that one of the things that I feel like most people, and it was a different time, right? We always try to relate it to another time. It was a different
Right.
time this time, and I feel like a lot of the consumer had built up enough savings that yes, inflations did hit, right? With that,
Sure.
I mean, we all can see that, right? We all were paying more for goods,
Yeah.
but the consumer made it through, and if anything, it's shown how strong this economy is. At
Thank
least
you.
I would say.
Thank you. Agreed. Yes. Yeah.
All right, let's get into maybe some tech names, right? And
Sure.
some of the biggest ones, right? And we can talk a little bit about them, right? Like we could start with maybe like a Pan W that has been getting hit lately, but of course, I don't think anybody thinks cybersecurity is going away anytime soon. And this is a best of breed.
Oh yeah.
Where would this make sense? Because
Recently named number one for cybersecurity by Gartner, and you call it what Pan W, otherwise because that's a ticker PANW, otherwise
yeah,
known as Palo Alto Networks. Recently made a look at that. There's the chart, and what is that? A 5-year chart that we're looking at, Mitch?
it's the weekly that goes back to like 2019. So
Yeah,
you could say 3 or 4 years. Yeah, five
yeah.
years.
So you can see. I mean, it's certainly at a 12-month a 12-month low. Uh,
Hmm.
I like it in here. You look at valuation, and all these names are kind of trading in the same spot. Um, and by all these names, I'm talking Salesforce, Google, Palo Alto Networks, Apple, etc. They're all kind of trading in the same spot, somewhere between 20 and Nvidia, 20 and 40 times earnings, with growth of 20 to 25%. And it's consistent growth, plenty of cash flow, low debt. Um, these are names you want to own, and as you said, cybersecurity has only become more of an issue. In fact, if you look at some of the Gartner surveys of C-suite executives, chief technology officers, chief financial officers, the people who are writing the checks, 80% of them in the S&P 500, 80% of C-suite executives expect to spend more on cybersecurity in 2023 than they did in 2022. That
Yeah.
creates an enormous tailwind for a company like Palo Alto, which is again the largest and it's the best in breed.
Love it. Those are companies that I also feel could be, like you mentioned, a little bit recession resilient. Even if
Yeah,
we were to get in trouble,
right.
well, I still need to kind of pay the cybersecurity bill, right? I mean,
Yes.
that's just the way it is. And especially in an environment where we're getting further and further into controlling of data, right? Really being ownership of the data. Cybersecurity is going to be playing top part in that. Now, of course, now there is a company that has been getting, the backfire, and I'm sure you've been seeing it all around, Elon and Tesla. What do you think about this story? I had to get towards it. What do you think, Adam, here, as
Yeah,
Tesla has been retracing a pretty substantial amount in December?
yes, it has. I've never owned it. I don't own it now, and I don't intend to buy it.
Okay, tell
How's
us
that for
why.
you? Yeah. And what's interesting is that you're probably the fourth person to ask me. I was on Fox Business this morning, and
Oh, I'm
they asked
sure.
me about it. And two of my subscribers, my bullseyebrief.com subscribers, have asked me about it literally in like the past 48 hours. Because everyone's kind of looking at that chart and saying, hang on, I know it's a falling knife, but it's Tesla.
Yeah,
Yes, it's Tesla, but the problem is it doesn't have a CEO right now. I love Elon Musk, but he's not focused on Tesla. He's focused on Twitter. So he's absent right now. And you add to that the fact that this thing is trading at, I don't know, what's the multiple? You tell me, you've got it up there in front of
maybe
you
like
probably.
60s or 70s, but I
Yeah,
mean, I'll take a
60.
look there.
Yeah, a PE of 60, and GM trades at a PE of what, 7? Ford, maybe 6. Um, why should I pay 60 times for Tesla when I can go buy, GM for, 1/10 of that valuation? And by the way, GM pays a dividend.
Yeah,
You could make the argument that Tesla is actually a battery company disguised as an auto company, and that might be a reason to pay a higher multiple. But I just can't get comfortable with Tesla right now as an auto company that has yet to really delineate a battery strategy, and as a company that is missing its CEO. So I'm sorry, I just can't go. I'd love to, because it fits my American ingenuity, people and companies driving the world
yeah.
forward paradigm. But for reasons specific to Tesla, not doing it.
Yeah, Adam, I've heard you mention it before. We got to look into our leadership there of our companies, right? It
Yeah,
matters so much. And
so
there's
much.
certain times where I have heard from a CEO and been like, you know what? I want to buy that CEO because I know
Yeah.
that he's going to drive this company in the right direction. And
Yes.
then there's certain times where, like this situation, where it's been more like, well, I don't want to be anywhere near that company because of the CEO. It
Right.
seems like that's slowly but surely becoming Tesla. And that wasn't the case, let's say 2 years ago. Definitely was
Agree.
not the case.
No,
So
absolutely agree.
it just goes to show you that sometimes the story can change, right? And I think we all need to be flexible. We all need to be kind of watching what's going on. Last thoughts for investors going into 23, Adam. What do you have for them?
Well, I think we need to recognize that 2022 is one of those years uh, that does come along from time to time, but it's rare, thankfully, and that the world is a lot better than we sort of, I think, collectively believe. And so, if anything, I'm going to call 2023, Mitch. It's going to be the Wayne Gretzky year. We need to skate to where the puck is going, not where it is, because where it is and where it's been isn't great, but where it's going is a lot better. I think we need to look forward. I think we need to be positive, and I can give you some very specific data on something that happened last week. It's the message from the options market, Mitch, the put call ratio, which is probably something you look at as well, right?
Yeah.
Puts allow you to protect stock. A put makes money if the stock goes down. By contrast, a call makes money when the stock goes up. Typically, investors buy more calls than puts for the simple reason that over the long haul, stocks tend to be up 2 days for every 3. So you want to be long calls, not puts. Right now, people are buying a lot more puts than calls. In fact, last week, the put call ratio went to 1.5.
Mm,
For context, Mitch, the put call ratio has only gone above 1.4 5 times in 5 years. It's really rare when people get so negative that they're buying 1.5 times as many puts as calls. And if you fast forward over the next several months, what you find out, Mitch, is that on all 5 of those occasions in the past 5 years, when the put call went above 1.5, stocks rallied all 5 times. And they rallied by an average of 31% over an average time period of 7 months. So I think that actually bodes pretty well and it lines up with my other feeling that we've just gotten way too negative about everything, and
Yep.
that earnings are going to be less bad than feared. And oh my gosh, Mitch, they might actually be okay, which is what happened in the third quarter. I think we're going to see that again in the fourth quarter.
Well, like always, Adam, you're not short of optimism, but I'd call you more realist looking into what's going on out there. There's a lot of pessimism out there right now into the market, inflation, and everyone expecting to be on the negative side. And a lot of what happens, and I'll go to a quote that Dennis Dick has taught me from our pre market prep show, is that the market likes to hurt where it can hurt the most. And if
Hmm.
the most is going to be leaning on that bear side, you called it there with the put call parity. Well, there you guys see it. It looks like the Bears might be in control for a short term, but we all know rather be in the markets than out of the markets because usually we come back up and we come back roaring. I don't think the U.S. is in any trouble here overall. I think we're just going through a little bump in the road, and we'll be back next year. And I'll
Yeah.
definitely have you back, Adam.
Oh, good.
Appreciate you like always. Thank you for coming on all this year. And I truly hope that you have a great New Year's and blessings to you, my friend.
Oh, you too. Hey, thanks, Mitch. You tell me whenever you want me to come on, and I'll be here.
Always. Have a great one, Adam, and we'll bring
Okay.
you back. Take care.
Thanks, Mitch.
All right. That's what it's all about. And definitely, if you guys missed that interview that we did from Central Park, it was such a great interview. I'm going to throw it up here in the chat so that you guys can check that out if you guys haven't already seen it. Throwing that up here. Let's take a look back into the market. But a really good conversation there with Adam. And I think that he has something there that a lot of people are maybe just not are thinking about, and how the narrative has truly gone to that negative side, right? Eventually, and usually when we see this, when it starts leaning in one direction, we get those rapid turnarounds. We'll just have to wait and see what 23 brings us. All right, let's get back towards the market. Let's see what we're doing now. We're still bouncing. Did we get off of that VWAP? Look at that. Look how we reject right off of that. I'll show you guys that line right now. SPY went right back towards the VWAP. Would we reject off the 380s? And we reject right off of that, right back down there towards 378. Looks like we're on a slow leak to the downside right now. Let's go to Tesla. Tesla trying to hold on the VWAP right now. You can see here, at least in the intraday action. What do you guys see here? Well, a lot of times I like to go towards my hourly charts, right? Hourly charts help me distinguish more resistance and support so that I'm not so, kind of short-term thinking, right? Well, right now it seems like we're having support around the 109s. Resistance, we can't get above this 114.40 or 114.27 area. Let's see if we can get back into the 114 handle and actually hold. We got to 114.02 in this recent hour. Now we're looking at, we just went up there. We rejected it 114.02. Will we get back through there? That's what I'll be looking for on Tesla going into the close. All right, pulling out that banner here. We'll take a look at what else is going on. But if you guys have tickers, feel free. Throw them up in the chat. What's going on out there? Still 2 days left to harvest, says Hammersaw. That's a funny one there. EKS, what's going on? SRT Challenger, how we doing out there? Those printers going burr? All right, it's good to see you guys in the chat. What stocks are you guys taking a look at today? Let's go into what was hot and what was not. All right, let's take a look here. Looks like every sector into the red from the open. Energy leading the downside action. This is not good here. I think overall, Oxy down to 62 now. Let's go here to XOM. XOM right back down there through the 109s towards the 108 63s. And I'm really starting to get a little bit concerned as we stay here towards the top on energy. Will energy be that sector next year to keep staying in? Or will it have that nasty turnaround, right? We'll have to wait and see. Of course, we're going to have to take a look at the supply and demand issues out there. But it seems like if we are going into recession, we could have some demand destruction, right? There's a couple of catalysts now, and we just talked about some of these with Adam Johnson, that could turn this oil trade around. Of course, we'll have to wait and see. There's a big volume amount towards that bottoming action at the 104. If we crack that again, we're going to have to be careful. But oil has been slowly just working its way back. It's up about 5% in the last month. We'll see what happens to these names, but I do see a little bit of a slowdown in the future. So if it's going to slow down, not make too many new highs, is this still an area that I want to be a part of going into 23? We'll have to wait and see. Of course, one of the things that I'll be looking for is for monthly action to start showing me a break down. And that's a move back through that 100, coming into the prior resistance towards 97. If we do start seeing that, I'll be a little bit careful. And this monthly candle from November kind of worries me a little bit there. And ExxonMobil looks kind of like a little bit of a topping candle, doji. Now we'll just have to wait and see if we can get back through that high. That's 114.66. Huge volume on Tesla again. Yeah, a lot of people trading it in and out, taking their shots. But is that a good thing or bad thing? I don't think it's long-term positions coming into Tesla, because a lot of people are not trying to play the catch the falling knives, especially when you're seeing a stock like this, where it's like 1, 2, 3, 4, 5, 6, 7. It gets a little bit tough. Now, one thing I can tell you is that 106.60, probably they're looking at it to act as support now that some people are taking their shots in the 109s. Now we're starting to get that bounce back towards 114. We just talked about it. Will it get through that 114? We'll have to wait and find out. All right, we'll take a look at some other names. Energy down, basic materials getting hit hard today. What got hit there? Coal just getting a big beat down today. BTU right back down. We were looking for where we're going to get into the 30 handle. I talked about it. Could we close into the 30s? Well, we closed at 29.33. We went to a high of 30.21, but quickly came right back down. With this being mentioned, be careful now as you're starting to see coal fall off the tape. I'd be a little bit concerned. I'm not feeling the best about the coal trade or basic materials overall, as we're starting to see a little bit of a turnaround. We'll see what happens in, like, let's say a steel trade that started making a little bit of a bounce back, now has been starting to come back down. A name like NUE had a good day yesterday. Now it's starting to come back down. Is this quickly just going to keep breaking towards the downside? X, will this start cutting through 25? We've talked about recession concerns. Will these come for the materials? Something to keep in mind. All right, real estate, not much to say about that. Coming down a little bit. Consumer cyclical, not looking too good right now. Luxury goods, definitely coming down. Resorts and casinos coming down today. LVS after a really good day yesterday. Wynn after a really good day, coming right back down here. It doesn't look like we're having a good day overall at all here. I'm going to try to look for an industry that's into the green, but look at tech. Tech getting big hit there. Solar, consumer electrics, it's not looking good here. First Solar is starting to break here, and I feel like this is one that we can start looking for maybe even short opportunities as we're starting to see First Solar break through that 150. I like that level as resistance. We'll see what happens there. 151 also. Will this come right back down? Not a bad one to take a look at. EMPH down about 3%. SEDG down, and pretty much all of the solar names down today. We got to be careful in solar as we're starting to turn around here, and it's very cyclical. So you guys can see here, a lot of topping action. Look how quickly we're coming to the downside in solar. I'd be looking at some of these names potentially for some shorts, but that's just my mentality. All right, utilities also, can they hold here? I don't think they hold for too long. Maybe they keep kind of a stair step up, but eventually I think this breaks. You can see how Duke has made its way back after a really hard downturn, went all the way up. Will this start to turn around? XLU, one way you guys can also keep watch on this trade. If XLU starts breaking down through the 68, might be able to look for a little bit of a trade there, but it's been just stair stepping its way back. Financial services, what's going on with like a stock like JPM, right? Hanging on here, hanging on. These are the type of stocks that I think could get into that nice little push next year. As you start seeing what? Interest rates stay high, JPM might be able to make a little bit more money next year than it did this year. They're not bad stocks to think of as they're starting to get that nice little push. We'll look to see 134, 136, 138. Couple of levels that it needs to get through. We'll see if we actually start pushing on here. But I'm actually thinking, at least from the chart, just the chart mentality, thinking interest rates, it might not be a bad area to be in and a bad area to watch. Goldman Sachs has come back significant. Let's take a look here. What would be kind of a 50% retracement of that move? 50% puts us right underneath here towards 339.50s. We hit it even today. We'll see if that area holds. Look how that went right towards that area. We'll see what happens there in Goldman Sachs. All right. In healthcare, our least sector down on the day. I wanted to take a look at Moderna because Moderna got hit hard yesterday, continuing the down action. That's not looking good there, guys. BNTX, same thing. So I'm not exactly sure on what's going on here. If it's more lawsuits or law cases that is going on in Moderna and BioNTX, but I've been looking to find out because there's definitely something that's happening here. It looks like there could be kind of coronavirus that could be around this. We'll see what happens. Right now, it's not looking that good here as you're starting to see these stocks turn around quickly. You got to be careful as we're seeing them break down. All right, time to catch up with the chat. What's going on out there? My data shows financials only sector up today. Well, overall, it might be up right now, at least in my readings. I don't have it even up, but there's some stocks that are up here that are making a little bit of a bounce today, like Citigroup. Doesn't look too bad there. SOX down -1%. Yeah, definitely SOX not doing the great today. Definitely getting hit hard there, the bullish semiconductor. And you can look at SOX S, see how that's kind of pushing there. Definitely those stocks. What about like a Visa? Is this hanging on? Is this one that I might want, right? Well, I'm looking at this one to see if we actually hang on to this pullback, then start making a way back towards 210, 215, and 220s. We'll see what happens there. Visa is not a bad long-term chart that I like, but it needs to hang on here on this pullback and get back up through the 210s. Momentum stocks being held back by today's poor market performance. I do believe that. It's definitely not giving it a little bit of lift. Generac, missed my buy on Generac after it broke 100 back to 92. Order was in at 90. Generac has been one of those that, I don't know. I think it could bounce back, maybe even to 100, but this is not a company that I want to be in by any means. I feel like it's down there towards 90s. I don't really like it. I feel like it's just been kind of a big push up and could keep coming down all the way back into old pricings. I'd be looking at this back in the 60s and the 50s. Right now, it's still at 95. I still think it's expensive, but you guys make your own decision there. Cat and Deere, what's up with those stocks? Are those stocks going to stay strong? Looks like we are still battling. Will we start coming back down in Deere? If Deere does make the crack and come into the 420s, we still have an opportunity to maybe catch on a pullback a Cat or a Picard, right? That's what I'll be looking for these stocks, to catch a little bit of a pullback and get that next ride up. We'll see what happens there in a stock like Deere. All right, we'll see what else is going on. Boeing's another one that I'd take a look for that next push through the one right here, this 191.11s. If we can get back into the 191, I think we get towards the 200. Will it make the next run? We'll have to wait and find out. Can Boeing take that next lift? It's just been slowly working its weekly up too. You can see higher lows, higher lows, higher lows. Let's see if the trend can continue, and the trend can be your friend. All right, keep going here. I'm liking HBAN. Okay, let's take a look there. Huntington Bank Shares. All right, let's take a look. Looks like I've been drawing a little bit of a trend line here as we did break back above it. Pulled back here. We'll look to see if we get that next push. Let's go to the daily. Daily had it at 1550. We pulled back to 1350 really quickly. Then coming back here towards 14. Would want it to take out the 1425 really quickly, back towards the 415, not back here towards 375. Because it could kind of come right back into this gap zone here into the 1378. We'll see if it can hold 14s. It's kind of a slower name, not really moving too much right now, but at least hanging on a really reddish red type of day. Look to see if you close back there towards 1410, That's going to be looking good. All right, Boeing getting the Ukraine money. I was probably getting at least some of it, right? Great American, great American. I love it. Anyone think Tesla reached capitulation low in the pre-market today at 105? Still fighting with that 113 price point. Yes, it did probably meet a short-term capitulation, but that doesn't mean that it can't break down even further. There's no level that a stock could break down to that it can't go through again. I'll just say it like that. There isn't any stock. So even though Tesla is bouncing, it is getting that bounce today. This could just be a short-term green day like you saw here on the 15th. And then shortly, you crack it the next day. So that's what I'd be watching. One of the big things on this one was if you look to the left was 161.62, the high. The high that day was 160.93. If you can get back to the prior day's high, I will like this stock. But that's not what it's seeming like right now. If you look at the day, right? At the day, yesterday's high, because I'm having some wicks there. Yesterday's high was 119.67. We have ways to go to get to 119.67. So in my eyes, I think we need to recover that end. If we can recover that end, now you're breaking the pattern. It's not just lower highs, lower highs, lower highs. Now you're getting a higher high and getting that turnaround effect that you look on the charts. I'll wait towards that for Tesla first. Let's go to EQT. EQT, I got you. We'll get into it here. Let's go to a monthly outlook, then we'll work backwards. I always like to start on the monthlies, really, if I'm going to take a look. And what do I have drawn here? I have kind of more of that symmetrical triangle, right? Where are we going to break to the upside or downside? Looks like when we broke the 40s, that told me that we're going back to 35. Now we're back towards 35 and below that, right? Now let's start working our way back towards the weekly, seeing if we're seeing some support here. And you can see here on the weeklies, it's more towards the support here towards this 33.40 area. So I'm going to draw a new line for us here, and we could even do it at the low here on this candle, which is 32.55. So it's going to be the next layer of support, I think, that we can run into. Now, from that point on, can we get a bounce? Well, let's take a look first how we are on the RSI. Looks like this stock has a tendency of coming down big before. It's had a tendency of going down as low as 13 on the RSI. And you can see there's a couple of wicks that are below that, but I'm looking for another move that's actually down there to show me that this is going to get a little bounce. Maybe I can even move it to 16, but we're not at that level yet. I still think this can pull back a little bit, maybe even cracking through the 32s, going back here towards the 24.30s, and then finding a little bounce. Right now, this has actually gotten out of favor in my eyes. It's broken the pattern, needs a reversal style back up. It's not looking good right now. Is 27 in the cards for EQT? Yeah, that's this 27.57. I could see it coming in right here towards 27. And then we'll take a look at it again. But I could see that coming into play. Doesn't mean, 100%, rely on my outlook there, but I could definitely see it pulling back towards those levels. And if we look at it on a monthly overall, this stock has a tendency of fighting whenever it gets past 35 and not being able to hold the gains. Even here, when we made it all the way up to 55, when we quickly went back through, we started using this as resistance and gave it up, the 40 level. Now we can't even hold into the 40 level. So bullish, this chart, when we come back to 40, bearish until it comes back towards 27. That's the way I would look at it. I'd look for it to kind of fade away, especially if oil is going to turn around. I know EQT is kind of more of that natural gas type of play. I'm going to stay out of this play. I've been watching it for a little while. One that I did was taking a look at was Halliburton. If you just want to mention one in oil that I think could have a good next year, it's this one. And the big thing for me is watching for it to just hold its trend. It's tried to get up there towards 40 multiple times, needs to hold this pullback towards 37 and then get right back up through 40s. If that doesn't hold, if it breaks 37, I could see it just coming also back down to the 30s. All right, just taking an outlook there. I'm always going to try to show you what I see EKS. If you guys don't see that, by all means, go with your own outlook. I am no financial advisor here. The only thing I can do is be fully transparent about what I see on the charts. And it's up to you if you guys see the same thing, right? Draw your lines, take a look at it, learn from the outlooks. We'll see what happens. A lot of times I'm looking for stocks to make what? 1, 2, 3. We talk about it. The rule of 3, right? This stock made a drive up, a pullback, a drive up, a pullback, a drive up, a pullback. Right here, we're supposed to break out above the 45, and we just fought way too many times trying to get into this breakout stage through the 45s. And if we take a look there, what also is happening there? Very low volume on that attempt to break out. That's not going to help us ever. We needed that nice little volume break like you got here, volume jumping on the breakout through 45, and this would have been looking great. Instead, you got low volume on the attempted breakdown, and then on the down action move through support, you actually get increased volume. That's dangerous. It could be a breakdown and selling, letting go. All right, let's go to one more here. Mesa, I got you, Bug, and then I'm going to go ahead and wrap up, and then we'll go to at the close. At the close will be at 3:30. Don't miss that, team, as I'll have Joel Elconin back, and we'll take a look into some different stocks and outlook. All right, let's do Mesa. Mesa's at $1.20. Normally, I wouldn't cover too much of this, but it's a day like today. I'll take a look at it. It's just going to tell. I'll just do this. A lot of times, you guys heard me. I did it with the other stocks, right? Started at the monthly. Well, if I start at the monthly on this one, what does it tell me? It tells me immediately go away. I don't want to be mean about it, but it tells me go away because the trend has not changed. You've had in the last kind of 21 bars, 1.7 years, you've been going down. You need to see this change. We need to see this actually move up, right? We need to see it move up. Right now, the trend is not your friend in this one, unless you're playing it to the downside. If it can get back, let's say through 150, up at $2, well, then now your trend is changing. We still have yet to do that. Even when we made this move up here towards $3, what do? Make it back towards prior resistance and reject from that right back down. The trend is not your friend right now in Mesa. All right, last one. I'll do one last one here. I'm seeing BLK, BlackRock. So this one's an interesting one. Chart over here says bullish move. But of course, we heard what was going on in situations with their asset and their management. It seems like I would be really, really closely watching this move. If we can get back through 720, yeah, then we're looking pretty good there. But we want to see it, make sure that we hold kind of this price range here. Make sure that if you do get any downturns, we ain't breaking through the 680s because that could really quickly be the downturn there. I would be looking for more of the kind of reaction through 720 with higher volume. If you can see here, we're getting lower volumes on these moves. Look for a nice little volume pop like you got here as it's going through that 720. Then we can look to us to get back right there through the 780s and just trying to push right back up. One thing it does have is a nice bullish cross. That's right here where the 50 passes over the 200-day and the 200-day is starting to slightly move upwards. That's going to be a good outlook there, especially the 9 EMA right in the middle of the price action. We'll see if it takes a move towards the upside or the downside. All right. Appreciate you, Kristen V. Appreciate you coming in here. Definitely. Larry Finks loves FTX. I'm sure he does. You should tell him to invest next time. And Southwest, love. What is going on with the love? Not getting any love there as it's getting hit really hard as people not liking the actions that are going on Southwest Airlines. And if you look at it, it's actually hurting all the airlines as they're making a down move here and really getting beaten all off of the Southwest Airlines headlines that they're still doing cancellations. I just hope my man Joel Elconin can make it. We'll find out. All right, guys, hit the like button. I hope you guys enjoyed today's show. And if you're just joining now, rewind. Take a look at the interview that we just did with Adam Johnson. We just did an update into 2023, what stocks to look for, what does he think is happening in, of course, the Fed outlook, and what has changed since his October update into 23. If you guys missed that, I'll throw it up here one last time here for the link to you guys can check out that video. Until at the close, I'll see you guys a little bit later. That's at 3:30 Eastern. Don't miss it. Joel Elconin and I, as we take a look into the market, what moved, what didn't, and what we should be looking forward to in the later parts of the week. It'll be the last time we have Joel for the year. So I want to see you guys there at 3:30. Have a good one, team. We'll see you in a little bit. I hope you guys enjoyed today's interview with Adam Johnson.